Okay, so again, I'm Gina Sudam. I'm the president of the Wyoming County Chamber of Commerce. Thank you guys for jumping on this call today. I know that we are all experiencing some pretty uncertain times in industries all across the board, right? That usually if we have a disaster of sorts, it affects a certain area or it affects a certain industry. This is very unprecedented to see such effect on so many different industries. But it's been an honor to continue to send you what I hope is useful information and to be able to bring us all together. So as I was saying earlier, we had 63 people registered for the call today. We have about 55 participants on the call right now, and we'll continue to let people in as they do come on. We are getting together today to talk about small business assistance. So we do recognize that many of you are struggling in your businesses right now, and there are a lot of resources and a lot of information coming at you very quickly. We will do our best to answer the questions that we can for you. However, bear with us that this information is coming out fast and furious, and there is sometimes not a good answer yet, right? So there are many things that have passed that don't quite have application processes and other processes written for them yet. So we're doing the best we can to get you the information as quickly as possible, and then bear with us on the questions that we may not be able to answer. As I said earlier, if everyone is muted on the call except for our speakers, if you have questions, at the very bottom of your screen under all the pictures, there is a chat feature. If you double click on that, you can post your questions. I kind of ask you to listen through the speakers before you really start hitting them with questions. And if you can say, what your question's pertaining to, that would be great. We will, let's see, everyone is on mute. If you want to eliminate your camera, I discussed this earlier, hover over your picture. There's the mute button, and then there's 3 little dots. If you click that, you can click stop video. It'll just show us a box with your name. It won't show us your picture anymore. But I do enjoy seeing all your smiling faces, so we are happy for that today. We are going to get started this afternoon with Keith Yurgowski. I always torture your last name, I'm sorry. Keith Yurgowski from the Small Business Development Center. Keith, I've known Keith probably since I started working for the Chamber. He's been a great asset to Wyoming County and a great resource for small businesses. So Keith is going to talk a little bit about the SBA disaster loans that have been rolled out.
Okay, thanks, Gina. First of all, thanks for participating today. I know everybody's got a lot of anxiety. Our office has been working around the clock, actually, for probably the past 2 weeks. Also, all working from home for the first time, like many of you, and trying to get adjusted to that as well. I'm sitting here right now with my daughter right behind me taking an online classes, which is why I'm wearing headsets, so I don't have the noise kind of disturb her. The SBA reacted quickly. A lot of times people, like to bash the government and how slow they are. But in this case, the Democrats, Republicans got together quickly, put together some assistance packages, rolled them out through Small Business Administration, and in record time, because of there's a huge need. And as Gina said, this isn't affecting just a small industry or a small geographic area. It's affecting everybody nationwide. So there's two different loans that I'm going to talk to you guys about. The first one is the traditional disaster assistance loan program that SBA has. A portion of that is called the economic injury loan. So the economic injury loan that was released to businesses probably a little over a week ago. You could go to disaster.sba.gov and apply for this loan immediately. The SBA disaster loans are a 3.75% loan. It's amortized out over 30 years. If you're a nonprofit, it's 2.75%. The maximum loan you could take there is a $2 million loan. But in the last day or two, they've added a component to this. So anybody who's actually applied for this probably needs to go back in, because they added a bridge loan to this of $10,000 that'll cover some immediate costs, and you'll be able to get that quickly. Even people who are denied, from what we understand, the SBA economic injury loan, which from what we're hearing is if your credit score was below 600, you weren't qualifying. But supposedly that's not the only qualifier, but that is a big part of it. So there's supposedly this $10,000 bridge loan, or advance they're calling it, is still, you're still eligible to get that. This is possibly going to be forgiven if certain criteria are met regarding the loan. So it could be a $10,000. They don't like to call them grants, but it could be if it's forgiven. So again, at this one, you apply at sba.gov/disaster. I'm sorry, I gave you the wrong link originally. So this is the traditional loan. This is the one I advise everyone to go there and apply for this loan. You don't have to take it if you choose not to, but it is something to keep in mind. Now, yesterday, or I should say last Friday, Congress passed a stimulus bill, and in that was the CARES Act. And the CARES Act has what's called the Paycheck Protection Program. And this is the loan that everybody seems to be very interested in. The Paycheck Protection Program will not be a direct loan through SBA like the economic injury loans, but it will be through your local banks and other lenders that get qualified by SBA, as they're going to try to ramp this up because they know banks are going to get swamped. So the PPP loan, as we're calling it, is going to be through your SBA lenders. It's for small businesses and nonprofits of less than 500 employees. Also, sole proprietors and self-employed freelance workers can apply. The maximum loan is either 2.5 times your payroll or $10 million. The interest on this loan is 4%. The duration of this is the interest rate is 0.5%. And the duration is a 2-year loan. So it's just a bridge to get you through. Payments are deferred for 6 to 12 months. And also, this loan can be forgiven if you keep your employees on the payroll. So if you continue to pay your employees, you don't have them collecting unemployment, and you use this money to pay them, this part of the loan can be forgiven. Also, part of the loan that could be forgiven is your mortgage or rent payment and utilities, as well as other employee expenses such as health benefits or other things that you would costs that you'd have associated with employees. Again, to apply for this, you're going to probably want to contact your local bank to make sure that they're participating in it, which I'm assuming all banks at this point probably are. So there's more details on this loan. And as they become available to us, I'd be happy to share them with Gina to make sure that you guys get that information. But those are the two loans. The difference, again, the main difference, the economic injury loan is a 3.75% loan that's amortized over 30 years. The PPP loan is a 2-year loan at 0.5%. And it's used mostly to cover your payroll and keep people on the main question a lot of people have is, I already told my employees to go collect unemployment. The goal is, once you get this, to get them off unemployment as quickly as you can and start paying them out of the proceeds from this loan. So any questions on that? I know there's going to be a million.
Keith, we have a couple of questions. One was the criteria for the P3 loans forgiveness. So as my understanding is that as long as you use that P3 loan for payroll, mortgage payments, utilities, that can all be forgiven. Again, can be forgiven, correct?
Okay, I'm going to read this to you, so you could. This is coming right out of the paperwork that we got. You can submit a request to the lender servicing the loan. The request will include documents that verify the number of full-time equivalent employees and pay rates, as well as the payments on eligible mortgage, lease, and utility obligations. You must certify that the documents are true and that you use the forgiveness amount to keep employees and make eligible mortgage interest, rent, and utility payments. So that's the criteria they're looking at. If you use the money for that, then you get that loan forgiven. So the key here is the word full-time equivalent. So you want to make sure that, so the problem is you have a bunch of full-timers and then part-timers, the idea, if you could just keep them all and keep paying them, then fine, that's forgiveness. But, there is trade-off there where you say, okay, well, as long as you're either keeping the same amount of full-time equivalent employees. So if you have 5 part-timers who make up 1 full-time and you're still covering the same amount of payroll costs, and in doing that, then you should be okay to get the loan forgiven.
So Keith, we have a couple more questions here that I think I'm going to pose to you. And again, Frank, if you have answers to these questions, you can feel free to jump in. We have Frank Thompson on the line. Frank is the Deputy Director of Northern Tier Regional Planning and Development Commission. He used to oversee the workforce side and now has moved on into the economic development side a little more, but has a lot of workforce experience. Here are a few other questions. What if...
Gina, let me hop in for 1 minute. The first thing as business owners, the first thing you probably should do is, number one, reach out to anybody that you owe money to. So if it's credit card companies, if it's your local bank through a mortgage, if it's, your utility companies, a lot of these people are offering either, interest only payments or deferments for a few months. So I would start that to at least give you a little bit of financial freedom to take a deep breath and try to work through some of these loan applications.
And you know what I think might be best is if we kind of move through all of our speakers, and then I'll try to continue to skim these questions, and if they are not answered, then we'll answer them back. But I know a lot of these questions are going to be answered with some of the other presenters. So let's move on to Frank. And Frank, I know you were going to talk a little bit more about unemployment compensation, perhaps some clarity more around the P3 loans, and if you have any word on unemployment compensation for sole proprietors. I know that's a big question that we're getting, is how does all of this pertain to sole proprietors that don't maybe pay themselves on payroll?
Sure. Hi, everyone. I apologize. My camera isn't working, so you just get my name. So regardless, I was supposed to talk today about the state COVID working capital access loans that they had, except those loans closed. They ran out of money last night. About 6 o'clock last night, they announced that they weren't available anymore. The state had $60 million available, and they had $75 million in applications over the 5 days that it was available. So we're kind of in a holding pattern with that. Nobody has promised that there'll be more money added to that, but it's a possibility just simply because of the demand that they saw from that. That was up to $100,000 at 0% through the state. So I'm kind of pivoting a little bit, and regarding the CARES Act that passed on Friday, they've made a few very significant changes to unemployment compensation. The first is a 13-week extension on unemployment, so it's from 26 weeks to 39 weeks. We've seen this before. This happened, the last time we had a recession in 08, 09, that got extended, but they've extended that for 13 weeks. The biggest thing is that they're now going to allow self-employed sole proprietorships can apply for it. That is what's in the act, but we have not seen how that's gonna actually happen yet at the state level. As soon as we know something, obviously it'll be coming out from Labor and Industry. We will do our best to market it. I mean, we'll let Gina know, to let everyone know what the process for that is going to be. They are also adding up to $600 a week for the unemployment compensation. My understanding that that's on top of what, if you were capped out, that you can have an additional $600 a week added to what a traditional claim would be. This is good through December, is my understanding. They're also waiving the traditional requirements regarding work search. So normally right now, if you apply for unemployment, you have to be actively looking for another job. You have to be able and willing to work somewhere else. Those are the traditional criteria for unemployment, but that is being waived as well. So those are the significant things. I mean, there's a lot of information there, but again, we're waiting to see how it rolls out. And I know, the state right now, the call centers for unemployment compensation, they're struggling right now just to keep up with the traditional claims. So, how this goes. And I have no idea what the timing of it is going to be. There's also the rapid response activities. If you're aware of rapid response, that's where there's, if you have to lay off a significant number of employees or lay off employees, the state has we have a coordinator who helps address those employees directly. I mean, we're doing everything remotely right now, but those services are still available. That our contact for that is Ron Vogel out of the Career Link in Scranton. So that isn't changing at all. Other than that, your local PA Career Link, the Rehab Center in Tunkhannock, they're checking voicemails every hour, and they're also working remotely. So if you have questions for them, please call or email that office. They should be getting back to you, really quickly with that. I don't know offhand. If I had anything else, Gina. I got all this information this morning at another meeting, but I don't know if there's anything else. I don't have any other details really to answer any questions on it outside of what I gave.
Yeah, there's a couple of quick questions that are popping up now. One is the $600 a week prorated or given only if the employee's unemployed and not working at all? So the answer to that is it is not prorated. If the employee is working or has the ability to work from home, then they do not receive that $600. So I think that answered that question. I had a great call this morning. The PA Chamber did a really good call on all of this. They are recording it, or they did record it, and they're sending us a link. So I will post that link to our resource page on the Chamber page. And I'm going to show you all how to get to that page once we get through our speakers. And then, I'm sorry, my dogs just decided they needed to bark at something. The other question is, is the $600 being paid out to all unemployment, or is it based on compensation? Frank, do you know the answer to that?
I believe it's based on the compensation.
Yeah, and again, this was all answered in that call this morning, but there was a lot of there were a lot of things going on here because working from home is so fun. So I didn't catch all the answers to this, but I know there were a lot of answers around that given. So I will find the answers to some of these questions, and I can reach out to you all individually with some of those answers, or just post them again on our page. I'm sure there's an FAQ sheet somewhere about that piece as well, so I'll look for that this afternoon.
Gina, this is Keith. There's a question in there that says that I read that the rate was 4%, not 0.5%. When the original information came out on last Friday, the payroll, the Paycheck Protection Loan was supposed to be a 4% loan over 10 years. And when it actually came out yesterday, it came out as a 2-year loan at 0.5%. So to clear that up. The original information everyone received said 4% for 10 years, but that's not the way it is. And that's the thing with this, is it's evolving by the day. If you go to scrantonsbdc.com, we're keeping it updated as we get the information right on our front page. You can click our COVID-19 link. So as soon as the information gets changed or we get clarification on it, we keep that updated. And that's, again, www.scrantonsbdc.com.
Right, and there is a link to the Scranton SBDC on our chamber page as well. So someone just posted about they are self-employed and they filed on the unemployment site, not knowing that there was a separate site coming out for self-employed. Basically, your claim will just be denied, and when this self-employment website is open or available, the self-employment application, you'll go there and apply. I don't think that it will delay things as far as I know.
Yeah, I think you're right, Gina.
Okay. We are going to move on now to Neil King. Neil King is a commercial lending officer with, and that might not be his official title, but he is with Community Bank. And he's also on the Chamber Board of Directors and a great resource for the banking and commercial banking industry. So Neil, if you would like to talk to us a little bit about what you know as far as the banks are concerned, and when we may see some information. I know you did send me some information prior to this call as well, and I do have that up and available, and we'll forward that to everyone after the call.
Sure. Thank you for the opportunity. And as Keith has said, things seem to change day by day a little bit, and some of the details change and evolve. I'll just start with whatever bank that you currently deal with. Just encourage you to make sure you contact that bank, whether it's a branch manager, commercial banking officer, and just let them know of your particular situation. Tell them your story, how it's affected you. Most banks that I'm aware of are working with their clients to either do interest only or have a principal and interest payment deferral. It seems like the standard is typically up to 3 months. So if nothing else, it helps you conserve cash and get through this the next few months with this. As best you can, if you have your taxes available, they've already been completed, let's say, try to keep the information flowing to your banker so they know what's going on and have the information that they may need to process possibly a line renewal. If you have a line of credit that maybe it expires here sometime this spring or June 30th, as is fairly common, passing along that information in a timely manner will help them make sure those types of things get renewed. I'll just touch on a couple things with the payroll protection or paycheck protection program. There's, from what we've been told, there's no collateral requirements or personal guarantee requirements, so everyone can cheer about that, which will help things get done faster. It also looks like from some things I've read that in order to receive full forgiveness, that not more than 25% of the funds that are borrowed can be used for non-payroll items, such as utilities or interest expense. So just keep that in mind as well. A couple places you can go to get information directly that are updated. If you go to treasury.gov and you click on the red banner at the top, it will take you to information as it relates to the PPP, and it gives you an overview, PDF overview. There's a PDF for if you're a borrower, and they've also released, it looks like, at least the initial application for borrowers that can also be found at the treasury.gov website. It's not to say that they may not make additional tweaks to it, but at least they have something out there. And the good news is it looks like it's only a 2-page application from what I've seen. So it's not a voluminous application. I guess with that, I'll stop there. A lot of the details have been covered. And again, just I think the important thing for all of us is to work together and have patience, because everything's all coming at once as well.
Sorry, I muted myself. Thank you, Neil. I appreciate that. And there are some great tips. Again, on that website, I did just go to that treasury.gov. I'll make sure we post that link out to our page. And then I did just want to share a couple of things that I heard from another bank that they have said these are some things that they will be looking for. So your 2019 IRS quarterly 940s, your 941 and your 944 payroll tax reports, 12 months of your payroll reports beginning with your last payroll date and going backwards 12 months, that your 1099s, if you have any independent contractors, and then documentation of health insurance premiums if you pay those on behalf of your employers, and a document with the sum of all retirement plan funding that you may pay. So again, this is all preliminary, but this is what one bank in particular says that may be needed to apply for these loans. Again, it could change. This isn't concrete information, but I talked to all of my banking friends yesterday, and this is what one of them passed on to me this morning. So
Gina, I have a couple of things to add.
Sure.
On that. I also heard some banks are looking for articles of incorporation or your bylaws, as well as certification that all the employees live in the United States. So you want to include, have that. So the more of this information that you gather, it's going to make your process go quicker. Now, Neil mentioned that there's an application on the treasury.gov website. The application that we received yesterday was just a sample. So we assumed that the real application would actually be, forwarded to banks, that they would use something. So that could be new, Neil, as of today.
Yeah, and I don't submit applications to the banks yet, because we can't process them. We'd like to get started and not continue to have things wait, but we don't have all the details yet, or know all the process and procedures for getting them processed, approved, and funded yet. So just encourage you to prepare for everything and take a look at the sample application, as Keith mentioned, or that could be the final application, just so you know what exactly to expect and what information to collect.
There's another part of the CARES Act that also has an impact on small businesses, is that any business with current non-SBA disaster loans, so you started your business, you had an SBA loan, or you expanded and you had an SBA loan, under this CARES Act, the SBA is going to cover all loan payments on these loans, including principal, interest, and fees for 6 months. And this also is extended to borrowers who may be taking loans out in the next 6 months. So loans that are already in the pipeline, any loans for 6 months after March 27th are considered part of this. So, that's another way to help, alleviate some of your, cash for those businesses who are cash strapped right now.
All right, very good. It does look like some, and again, I can't see people's full names on here if you didn't type them in, but it looks like in the chat window, some are saying that that their bank does have the application. My understanding was that they don't have the actual application yet. So we'll kind of hold off on that and talk directly to your bank and see what your bank prefers for you to do. But yesterday when I talked to each of the bankers, and again, I probably talked to about 6 or 7 bankers yesterday, they all said, we probably will not have this ready until the end of the week. So we have—
Friday's I'm sorry, Gina.
That's cool.
Friday is the first day, I guess, that anyone could possibly do anything. But because of the timeline that it was just approved last Friday or Saturday, most of the banks or bankers that I've talked to, we have the same information that you have available to you, which is just public information. So, we're in the process, but still need the details. I see one question that someone asked about the proposed timeline for forgiveness, and my understanding is that it would be sometime after June 30th. You have to get the loan, have at least the 8-week period to show that you've maintained payroll and things like that, and then sometime after June 30th is when you would, I guess, come back and apply or follow up for loan forgiveness.
Okay, so we had one other question here that I think is important. So is the money at risk of running out for the P3 program like it did with the state program? The answer is yes to all of this. That right now they've only assigned so much money into the budget for these programs. Now, the federal government obviously afforded much more in each of these programs than our state was able to, but it is a definitive amount of money. So with that comes, the risk that it can run out. So I would say to you all, get your applications in as soon as you are able. I am going to introduce our last speaker, and Bob, thank you for patiently waiting for us. I have Bob Brown on the line. Bob is with Stonehouse Investment Planners, and again, also a great friend of the Chamber, and is going to talk to us a little bit about just some practical steps to prevent you, or hopefully prevent you, as Bob looks at it, from deciding that your retirement savings are a good asset to look at right now, because they're not, right, Bob?
Well, it depends, my usual disclosure. So thank you very much, Gina. So I'm a certified financial planner. I'm a managing partner at Stonehouse Retirement Income Planner. So retirement income and cash flow is what we do in our office. And that's really what we're talking about right now. Almost everybody on this call and in and around our neighborhood, whether it's personally or running a business, we are focusing on our cash flow. How do we get through these next couple months, 3 to 6 months, whatever this ends up being? So my little disclosure at the front of this is I have to say that this is just general advice and topics I'm relaying as I'm reading these rule changes here and sharing this with you. If you want specific advice, I see some other folks that do what I do on this call, and it's great to see their unshaven faces. I won't name names. I see you covering it, man. It's also great, by the way, to see Don on the bar sipping an herbal tea. There's something that's just relaxing to me when I see that. Thank you, Donna, for doing that. So going back to what I'm talking about here today, I love what those guys are talking about. I think the payroll protection plan is going to be the premier thing that most people will try to go after, and I think it could really, really make a difference in a lot of our business. So I want to say that I'm assuming most of you will go toward those programs. If all those are exhausted and you still need money, your retirement accounts, that's including your 401ks, 403bs, SEP plans, simple plans, even if you have an IRA just individually in your name, most anything that's a retirement account is now on the table for you to access in a way that we've never had access to before. So there are a couple things about here I'm just going to run through with you on how you can access that money, and then I'll take a minute to talk about whether you should access that money. So the first thing is, move my screen here. The first thing is about whether or not you can access your money. So you really need 2 qualifications. 1, you have to have a retirement account, and 2, you have to be adversely affected by COVID-19, which I would think almost anybody in this day and age can say they've been adversely affected. So really, pretty much everyone is probably eligible to take this money out. So the 2 perks that happen here is most of us who are 59 and a half or younger are used to understanding that we're going to get whacked with a 10% penalty when we take that money out. That is gone. The 10% penalty is gone. So the way this works is you can now take $100,000 up to $100,000 out of your IRA or your retirement account in the year of 2020. So between now and December 31st, you can take up to $100,000 in total out of one or all of your accounts and use that money for whatever. And I'll get to that in a second. So that there's no 10% penalty. The other really nice feature is if you play by the rules, there will be no income tax on that distribution to you. Now that's a big deal, but I want you to understand the rules. The rules are a 3-year clock. That 3-year time period, the clock starts ticking from the moment the day you get that distribution in your hands. Then you have 3 years to put all that money back into your retirement account. If you do that, there will be no taxation on that money. And I already said there's no penalty on that either. However, if at the end of the 3 years, you have not put that money back in, then all of it will be considered taxable income to you. So that's a bad part of it. If you're not planning on putting it back in, it will be taxed. The semi-good news is it looks like the IRS is going to allow you to prorate that tax over that 3-year period, which means you probably won't know till the 3rd year whether you can fund it back in. And if you want to spread that tax liability over the past 3 years, you're probably going to have to amend 1 or 2 years worth of tax returns, which is kind of a cluster, but that's the world we're in today. So that's important to know. One question I've had asked a lot is, what if I only pay a portion of it back? So if you take 100 out, you put 70 back in, and you kept 30 for yourself, you'll owe tax on that 30. And so again, you can spread it out over 3 years. But that's a really important thing for you to know. One other feature, which is different than the loan opportunities that the folks ahead of me just mentioned, is that there are no restrictions on this money. So if you want to spend, like a lot of the stuff we talked about, you have to spend it on payroll and certain expenses that qualify. With taking money out of your retirement account, doesn't matter. You can pay off your home mortgage, your auto loan, you can go shopping with it, you can help a loved one out if they're in a financial pinch. There are no restrictions, and no one's going to be policing what you spend that money on. Now, with all that said, I hate that they made it so easy for people to access their retirement. Simply speaking, let's take a quick, I want you to think of this as last resort money. It's not off the table, but I really want you to put it as last resort, because think about where you're taking the money out of. Simply put, almost everyone has our retirement accounts invested in the stock market and the bond market. Both of those have been slammed in the past couple, really in the last 6 weeks. But let's say those investments are down 20%. Some are more, some are less. Let's say you're down 20% and you take money out of your retirement to help fund cash flow right now. I understand that, but keep in mind, you sold 20% lower than you were 6 weeks ago. Now let's think about your best case scenario. This is where I have a problem really looking and finding a scenario where it works out for the better for anyone. Because best case scenario, you get cash in your hand, maybe you get some of these other loan opportunities that are out there, and you get through 3 months, 6 months, then you start to be able to catch up on your bills another couple months, and then you start to build up a nest egg, and you have enough to finally put back in. I think probably best case scenario, that's a year out. So if you were to do that, you're locking in that 20% loss, and guess where the market is? If your business and all those things are falling in place, that market's probably shooting up faster than you can keep up with it. So if you're not putting this money back in for a year, you're probably experiencing and locking in that loss today. And then you're probably buying in, it's a very good chance you're buying in at a much higher spot when you get the money around to put it back in. So you're gonna get a 20% drop here, maybe you miss a 20% run over here. That kind of volatility and that kind of in and out movement can be super long-term damaging to anybody's account. And I just want to caution you, when people do that, it could be damaging. So with that last part said, I want to leave on a positive note because I'm a positive guy. So I want you to understand there are a couple things Gene asked me to touch on. We talked about, I think earlier, the rebate checks that are coming in the mail, $1,200 to each person who fits a certain criteria, and there's income phase outs there. There's $500 per dependent. So there's some cash flow that's coming in there. I don't believe you have to do anything to register. I think those checks come in the mail based on your tax returns in previous years. Student loans, as we talked about, are going to be basically most student loans are payments are suspended for 6 months. And the good news, as Neil mentioned, and I think Keith did as well, that the lenders have been backstopped by the Federal Reserve and the U.S. Treasury. What that means is our lenders have more flexibility than ever to work with you and be on your side. So I think Neil said, talk to whoever you owe money to, talk to them, and figure out a plan forward, because it's in everyone's interest if they work out a short-term solution and versus the opposite. So the last thing I really would like to hit here is that I think a lot of folks on this call need to work with their professional network and their resources. So it's about understanding what opportunities are out there, and as these rules are changing, a lot of them sort of spill over into other parts of your life. So if you're working with an accountant, an attorney, a financial planner, whomever you have getting advice from, continue to get the advice from them, because I know a lot of people are home on TikTok and stuff, and they don't know how to kill the time. I can't find enough time. Our office is swamped with answering calls and sorting through this. So some people are amped up, others have time. When it comes to you running your business, take that time to do that research, because this can make all the difference in the world to get through this cash flow crunch. And with that, Gina, I will stop talking, which is rare for me.
All right. Well, thank you to all of my presenters today. I think it was very helpful. I do have one question, Bob, for you that came through. If you do not put the money back in your retirement, will the 10% penalty also come back? And I think you answered that.
From everything I've seen, there will not be a 10% penalty, regardless.
Okay. All right. Another question, and I think this is regarding, yes, this would be regarding the P3 loans. How difficult is it going to be to receive forgiveness? Is there criteria on how to meet those requirements? And again, this is if you pay your payroll with that money, if you pay your mortgage, your rent, some traditional operating expenses. That's what they're looking for you to use this money for. So as long as you do those things, and again, that is very well, that will be very well explained, of course, by your bank. And then that forgiveness will happen at the very end of loan. So you'll receive the funding, but you won't know if that funding will be forgiven until you can prove that you spent it on the proper items.
And
Does that
Gina,
make sense? Answer the
Gina,
question?
Neil touched on this, that 75% of the forgiven amount must be used for payroll.
Mhm.
So
Oh, good.
that's a biggie, and it's also based on the employer maintaining or quickly rehiring employees and maintaining salary levels.
Right. You have to maintain the same number of employees. And I think that was a question that someone had earlier on the call, is what if they received from an employee immediately prior to the shutdown their resignation, but the person hadn't officially left yet because they were giving 2 weeks notice or whatever. What happens in that instance? And again, that would probably be a question that you should ask your banker
Right.
when you're applying.
Go ahead, Neil.
I was just going to say, and the answer to that is we don't know.
Yeah.
Not that I've been aware of. We haven't been given that much detail. I think it would just play into your average monthly payroll prior to this starting. And then if you rehired someone to fill that position during the 8-week period after you got such a loan, that would be built into your cost during that 8-week period. If you didn't rehire that person and in your average payroll during that 8-week period from the time you get the loan to the end of the 8-week period is lower. My understanding at this point is that it's, and maybe Keith can comment, is that it's not an all or nothing forgiveness, that
Right.
it could be full forgiveness, or maybe it's 80% forgiveness if your costs of what you can prove you spent on payroll and other things maybe were only 80% of what you originally borrowed, that you could get 80% forgiven. So
Right.
I don't believe it's an all or nothing.
Right. The official statement just says forgiveness will be reduced if full-time headcount declines or if salaries and wages decrease. So it's not going to be all or nothing. It's going to be a prorated amount.
Another useful resource that Gina provided, I believe it's on the Wyoming County Chamber website. It's a summary by the U.S. Chamber of Commerce. And I believe it's one of the best reviews of what is included for payroll costs and what is excluded, and how to calculate that number. But there'll be more details to follow, I'm sure.
Okay. And I am going to show you how to get to those resources right now, because we've referenced a lot of resources that are available on the Chamber site, and I want you all to know exactly how to get there and what you're looking for. So again, thank you to all of my speakers. You can find contact information for each one of these gentlemen, and I just realized that I have a panel full of gentlemen, so next time we'll add some ladies to that. But you can find contact information for each one of these folks on our website as well. So I'm going to share my screen with you. That's what I want to share. Okay, so this is and you can all see that. Somebody,
Yep.
I can hear, give me a confirmation, thanks. Okay, so this is the Chamber website. And when you go to just wyccc.com, this big old box will pop up that says stay up to date on the COVID-19 resources. You click that box, that's going to take you into this panel of information. In here, this business and nonprofit resources is a great tool for you. Again, it doesn't look as pretty with bold and highlighted things that a normal website page would look like, but your information's here, and I felt like that was what's important. This is the easiest way for us to add and remove new links. So all of these pieces in blue are links, and you can click on these links. I believe this is what Neil was just referencing. And I don't know now, you probably can't see what just popped up.
No, we can't.
No, that's not the one.
I gotta
No.
share, let's see, I think I have to, hold on. I think I have to reshare the right page. That isn't the one, Neil, it's Paycheck Protection Program FAQs. Was that the one or not?
No.
No, okay. Let me just go back to my website. Let me see here. Sorry, there are a lot of windows open everywhere on my computer, as many of you know. Okay, so let me just get back to the website then. Again, there are many resources here. I will make sure that one that Neil referenced is linked here as well. I don't know why it's not. I've tried to keep everything that I'm sharing also on the website, but we'll get that one linked out there as well. This is, again, all of these tools are links. They'll take you out to the U.S. Chamber of Commerce website and so on. For those of you who are asking about, I think I saw another question regarding how will we know when the sole proprietor unemployment opens up. I will tell you as soon as I know. And again, a good place to check, I think, would be the Department of Labor website. Frank, is that probably the best place to keep looking? The regular unemployment website?
Yeah.
Well, another question to follow up with the P3 forgiveness. Is there a chance that that forgiveness will be declined from the lender even if they spend the money the way they were supposed to? I don't know the answer to that question.
I think the lender would go by the SBA guidelines, and so if the guidelines are met, that's what the lender would be going by, to my knowledge. So there wouldn't be any reason that it wouldn't be.
Right. And
Keith,
so,
do you have anything to add?
The only thing I could see that would be a problem though is if they weren't making the loan payment. That could be an issue with the bank. It says it's going to be up to the banks, I'm assuming. So.
Yeah, and the payments are deferred for that time period. So.
For the whole 2 years?
No, for like the 6 months.
Yeah. But the loan forgiveness can be applied for after, right? I mean, later than that.
It could be.
Yeah.
But I think most people will probably end up applying for it between June 30th and September 30th, I would imagine.
Right.
right. I would just reiterate keeping documentation, right? So make sure that you cover yourself as far as if you're taking out one of these loans that has very specific ways to spend the money, that you are documenting that is how you spent that money. I'm going to quick go through some things that I have, some quick tips for business owners at this time that were shared from another chamber, but I thought would be helpful for all of you. Just 5 things here. Number 1 is talk to your banker. I think we've said that about 1 million times on this call, but again, talk to your banker, talk to your financial guy, make sure that you get advice from the experts, right? Ask for help. We have a very amazing community here in Wyoming County, full of great business owners that are that have served as peers, mentors to me, and I know would do the same for you. So reach out to people that you trust and ask them for advice. Ask your peers. If you're in the restaurant industry, talk to other restaurant owners about what they're doing right now and what they're seeing. Now is a great time, again, not so much for Bob and Neil and people who are staying extremely busy, But now is a great time for those of you who can't run your operations as usual to work on your business, right? So you can't work in your business, but work on your business. Do things like take those trainings that you always put off. Listen in on webinars. Also update your email list. That's something that we all put off, right? Going in and cleaning up those old emails on your email list. Take the time to do that. But also take the time for you. Take the time to step back. Tomorrow morning, we're going to have coffee with Kara Golden. We're going to do just this. But it's going to be open for you all to comment and talk a little bit. We have a much smaller group. I'm not expecting 55 people to be on that call, but it'll just be a nice way to, again, share what we're kind of experiencing right now and take a step back. So take a meditation course, relax a little bit, try to take a step back and enjoy your family. Just something I've been trying to do, although I'm trying to keep them away from this conference call right now. And then again, follow the Chamber on social media. If you haven't right now, make sure you're checking our website. Our social media page, Allison is doing a fantastic job keeping that up to date and sharing the links that we're publishing on our website out to social media frequently so that you can see those resources there as well. Also, it's a great time to help out your fellow business owners by writing a review for their business. So if you've done business with somebody in the past, visit their social media site, visit their website, visit Google, and write a review for them. Say, hey, that Bob Brown, he does a great job over there at Stonehouse. And if you're looking for somebody, and those are great things to do to help each other. And I know this is a community full of helpers, people who want to support each other through this. So please reach out to your neighbors and reach out to the Chamber. We started yesterday reaching out to all of our members and checking in. So if you need anything from us, please reach out. We've been able to connect businesses to help do a variety of things during this time. We've gotten masks for some of our nursing homes. We've took hand sanitizer to some of our businesses in the trucking industry. So we're here to help in any way we can. And even if you think it's a need that you don't know how the heck we would meet, we'll try to find the right people that will help you with that need. So again, I thank you all so much for your time. If there is anything that we did not get to on this call, I will follow up with you. And we will be posting this call later today. I just have to figure out how to do that. So I'll work on that one. Maybe I'll reach out to my friend Keith, who's great at doing those things.
Gina, there's a comment from Tyler that I think everybody should take note of here in the chat.
Do you want to?
It says there's a lot of businesses where the insurance rates will vary based off of payroll and gross receipts. So the business owners know that it might make sense to talk to their agent about those numbers while the business is closed or slow for a couple months. It could save them some on their premium.
Great tip, Tyler. Thank you very much. Call your insurance agent. So again, we were talking about calling your banker. Call your insurance agent. Call everyone that you do business with. Call all the experts and find out how you can save money right now. Very good tip. If you're not in your building working, there may be some money to be saved with that. If you're not traveling out and about because you can't do work, you may be able to save some money in that area. So again, thank you for that tip, Tyler. Thank you everyone for joining us today. I truly appreciate being able to serve and help you. And if there's anything we can do, again, at the Chamber, be sure to reach out. Thanks so much, everyone, and have a great day.
Stay healthy.
Good job, Gina. Thank you.